Hello everyone, how's it going? In this video, we're going to be talking about AVCT. And previously, when I covered this company for the first time, I saw that really a lot of people are super interested in this company and what's going to happen to it. And today, when I typed, the company, apparently my video showed up on the first page. So I'm sure that this is just a bug and things are going to be different soon. But of course, it's always a lot of fun to see so many people joining the chat. So today is going to be a little bit of a follow-up from my last video, and we're going to talk about, of course, how the stock is doing, what are the current speculations and possibilities, and also my opinion on the likelihood of those possibilities. But of course, we're also going to talk about a few things that maybe people are not thinking about them or linking them together, which may affect your outlook on how the whole thing is going to go. So with all that being said, let's begin. Before and foremost, of course, this is a discussion or a video for, entertainment purposes. Absolutely don't base off your buying or selling decision just on what I say or on what anyone says, for that matter. It would have to be a decision with, various considerations. So the stock is trending because ever since AVCT has been going through a change in its strategies from, we want to operate this company to we want to sell this company to the highest bidder, there have been a lot of people buying in the stock now while it's still relatively low, at least in the absolute terms. I don't want to risk too much with the relative value, but if you just look at how much it was traded at and how much it is trading now, it's reasonable to say that, okay, well, there's little chance that it's going to be bought at 30 cents a share, right? Well, we also have to consider that not so long ago, AVCT had a lot less shares. It literally has almost 10 times less or 8 times less number of shares circulating around. So this kind of explains in part why AVCT shares went down so much. This may be caused by the fact that, maybe the company is looking to raise cash and then it has to dilute more water in the soup to keep the ship afloat. Of course, this kind of stuff cannot go on forever, which may or may not explain why AVCT has decided to go through a sale. Now, other explanations, like I've said in the previous video, may include the difficulty of the industry itself. It's a big pond for sure, but it's a big pond with Titanic size whales, where tons of planktons are born and eaten every single day. So this is why it's not so easy to survive in this kind of industry. And I don't know if any of you watch a YouTube channel called Jay's 2 Cents, and back then they have. So back then he was talking about this company called Liquid Sky. And Liquid Sky was like a cloud computing platform, a little bit similar to what AVCT does. And I've played, a lot of high-end games on the cloud gaming computer, and it was quite good. It was quite good for me, but for the company, it wasn't so hot because at some point, their hosting fees and their hardware expenses were simply too high to make it worth their while. And at the end, apparently, it was purchased by Walmart, of all people. And nowadays, when I go on Liquid Sky, I'm not sure if it's the same website, but Liquid Sky nowadays is like a gaming website. It's it's a gaming article website or a gaming blog. Something that maybe high schoolers used to run, but of course with higher qualities. So with that being said, this universe isn't always kind to newcomers, especially the newcomers with not so deep pockets. So anyway, AVCT has been, trotting along, and recently, after suffering 95 or 97+% decline, they suddenly saw a possible exit. Right? They suddenly saw that maybe there's going to be more hope at the end of the tunnel, and hopefully they can get out at a reasonable price given the current market. With that being said, it's also useful to remember that the 2021 sale, or I can't remember when it was a few years ago, they also proposed themselves up for sale to the highest bidder, and in a very different market circumstance, in a different market context, they were not able to sell themselves. So in the current market conditions, in my opinion, things are only going to be more challenging. And also, we have to remember that small cap companies tend to surf on speculations and more on the waves of speculation on other people's speculation. AVCT, in many aspects, seems to be a meme stock. So it has a large retail presence, it has a heavy reliance on faith, and it's very reliant on the outcome of one or two events. This is not unsimilar to stocks like back then, like the GME or the AMC stocks, or the Ethereum or Progenity, and so on. So they were all relying on one single event to come out positively for the company. If it does, it's payday. If it doesn't, then you're going to be holding the bag, basically. Oh yeah, the company that I was trying to say was Workhorse. So Workhorse was waiting for the contract to come down in their favor, and then in the end, it absolutely didn't. Then the company went way down, along with the reputation of some YouTubers. Not really justified, in my opinion, as well. So for those of you who were wondering who am I talking about, it's this fine gentleman called Jack Spencer. Please check him out. I mean, it is a decent channel, and he's a lot of fun. So, with the most recent development, this on November 17th, there will be a fireside discussion between the development team of Candy, so one of the components of AVCT, and their integration with Microsoft Teams. So this has been, one of the most major, one of the biggest developments in this whole endeavor so far, because for many, it confirms a merger with Microsoft. Now, could it just be partnership? Could it just be a partnership, one plus the other one, so that people can share like the clientele and so on? It's possible. It's possible, but I have to say the timing is interesting. Okay? This kind of stuff, they usually don't, obviously they can't say it before it's finalized to a certain stage, but maybe the company is try to nudge people towards a certain direction, suggesting that, oh, you know what, we're in talks with Microsoft, right? So the timing is certainly interesting and should gather our attention. The other thing is the market is currently responding favorably. It's certainly not a takeoff yet. And also, nothing guarantees that there will be a takeoff either, but there is a clear desire from the market to jump up, just looking for a new catalyst to justify this next big move. Now, some may question, why would a company like Microsoft purchase a company like AVCT? The answers are very simple to list, and it's actually just one: to keep the edge, the competitive edge, versus the other big fish in this pond. AWS, IBM Cloud, Google Cloud Platforms, Oracle, and so on. A lot of big players they are constantly merging with other small companies, or actually they're constantly eating other smaller companies so that they have more knowledge, they have more capacity to develop new products for their clients. So this is one of the biggest reasons why a bigger company wants to buy a smaller company, especially when the smaller company looks even smaller, right? So just a tangent, you know how nowadays Meta, so what used to be Facebook, is basically innovating by buying the innovation, because their homegrown innovation, their organic innovation is almost non-existent. Anyway, this is another discussion, so we're not going to be talking about it today. But I'm just saying, for a lot of companies, buying smaller companies when they become bigger is one of the ways to be. It also depends on if Microsoft is currently on a spending spree. The only thing that comes to my mind would be recently they purchased Blizzard Activision Blizzard for $600 billion. Now, that was a sensational news, but this could suggest that in order to buy companies that they believe have a future, they can be generous, or at least generous in our own eyes, right? Maybe for them it's pocket change, but for me, if you give me 600 billions, are you kidding? So there's that. It also depends on if they're in what kind of phase they are with their shareholders. So if the profitability is down, if they want to justify, why they're getting paid this kind of salary, well, they can always say, because you know what, I've spotted young talents, young blood, promising, small companies that we've bought with your money, but we've bought for the benefit of the shareholders, that kind of stuff. We also should look at the current monetary supply and demand situation. If quantitative tightening, this concept that has been going around for some time now due to the inflation, is still in full swing, it's entirely possible that Microsoft will just wait for a bit later. Because if I'm being cynical, assuming that AVCT doesn't really survive the financial winter, it's really possible that at the end, people are going to be auctioning off their assets, right? It's what we call, they might be just selling their furnitures. And then maybe companies like Microsoft can jump in and take the things for cheap. You know how sometimes when you go to a house that's like foreclosed, it's been on sale for like 30% discount. It's that kind of thing. There would be no guarantee that a company like Microsoft, if that is their intention, that they can get AVCT for them alone. But that's the kind of risk that they would have to take. But regarding the quantitative situation, I would say this is a relatively unrelated news. But if you look at what's currently happening with the Bank of England, so another central bank in a different country on a different continent, nonetheless, but if you look at what they're doing, they recently had to intervene in order to save a lot of British pension funds from liquidation. And this could be an early sign of a changing tidal wave. So if we really think about it, ultimately, what is money? Don't worry, it's not a philosophical question. Money is ultimately a piece of paper with a number on it for people printing it. Okay, as long as they have the printer, they can print this amount. And then it depends on to where is it going to. If they're artificially buying up financial assets, this money will not go into the real world, or at least very little of it will ever trickle into the real economy. What is causing the current inflation is because of the oil price, which has also propped up everything that relies on transportation. So in other words, every single good that needs to be transported to us. So this is why, I think that the current inflation, although the words would sound similar, the current inflation might not be impacted by a limited quantitative easing. Okay, because if the Brits are having difficulties coping with high inflation and quantitative tightening, in my opinion, in the rest of the Northern Hemisphere, we wouldn't be too far from the same situation. So this is why at some point, the supply of money in circulation of some circuits might be different from where it is now. So we would have to think about this long and hard regarding the possibility of Microsoft purchasing assets once again, because quantitative tightening or the increase of inflation has told investors that their money is now worth more. Therefore, they might just go into safer assets, guaranteed deposits, savings account, blue chips, bonds, this and that, in order to have a yield. They don't have to risk it with AVCT. So if that's the case, the valuation might be different. And if Microsoft sees that, one, they're getting more money into the circuit, allowing them to buy more financial assets, and two, because of the inflation, money is still worth a lot, but it's still affecting AVCT that it's, not picking up just yet, maybe they would be incentivized to get AVCT or other merging targets now. So with all that being said, these are just fireside discussions, really. They cannot be viewed as concrete signs that this is definitely how things are going to be. So my conclusion about AVCT is that this is a company worth taking a look if your portfolio can stomach a major loss in that position, potentially. So this would depend on how diversified your holdings are across different sectors, and also how much or how little you're willing to risk for AVCT. My opinion is that maybe look at 0.1 to 0.5% of exposure and then go from there. By the way, the current price might seem already high to go all in, so maybe go in 60% now and to save another 40% for later. And if you fear that you're going to miss out because the stock might take off and you won't have the opportunity to go in with the 40%, you know what? Just don't go in with the other 40%. Because this is the kind of risk profile we're looking at with AVCT. Even if from the comments of my previous video, I fully understand that there are a lot of people who are very interested in the stock, who are very hyped up. But I've also been very hyped up by a lot of stocks, right? I've been very hyped up by Lucid when it was trading above $50. I was super hyped up by Hyliion when it was trading above, I can't remember, $50 as well. I was even hyped up by Nikola before I realized that something is very rotten. I was hyped up by Palantir, SoFi. So, there are a lot of stocks to be hyped up for. I'm not sure that they all live up to this hype. So this is why we should always be very careful when it comes to choosing and picking those positions, because let's be frank, the rest of the market, they don't really care if we were hyped up, right? What's going to happen is going to happen. But what we can influence, what we can change, is how much gains or loss we will have. Now, given the current market environment, I believe that the equity market is in a vast phase of correction, especially when it comes to tech and growth type equities. The financial market has been living and breathing thanks to the continuous creation of new capital, with different waves of quantitative easings. which will have consequences on the price of assets as well as their yields. With the interest rates kept relatively low over the years and the increase of amount of capital in circulation, this will keep putting significant pressure on the profit that we can expect in the investment products across the board. And this, by the way, is a reality that may shift in the years to come if the interest rate of core infrastructures within our globally financialized system increases. It's useful to remember that the market doesn't represent the real economy, and of course, the real economy doesn't always reflect in the stock performance, since the name of the game here is ultimately called supply and demand, which depends on a whole bunch of factors that go way beyond our own control. If we think about it, this is like saying, if your neighborhood house that is put up for sale is only allowing those who actually want to live inside to buy it, versus if you allow every single type of buyer with different intent or reasons to buy or to sell it. So obviously, there will be a significant difference in the price of this asset for those two scenarios. The market currently works more like the second option, and assuming that it would only reflect the fundamentals of the underlying economy would correspond to the first option. There are a few elements that are considered to be the reasons. The first one is the significant increase of amount of money printed by the central banks around the world, which is then distributed to the banks with the expectation that they will be loaned to businesses. Normally that's a good thing, but with a lack of opportunities in the real economy, the significant portion of that money actually went back to the financial system to buy up the price of existing assets. Now that the QEs have been wrapping up or ended around the world, I think that this drive behind asset price may no longer be as relevant as it is right now for the future. It is now compensated by the arrival of capital from one region to another, and from one sector to another even within the same jurisdiction. With the increase of tensions around the world, capital is always looking for a safe haven to park their money into, not just for a place to grow the nominal value, but with a currency that tends to keep its purchasing power as well. The third factor is the creation or the birth of artificial bubbles, either maintained by the market trends built up over the years or out of necessity. Capital needs to find a place to stay. Some good examples of this would include the EV sector in the 2020 and the oil and gas securities when there are tensions around the world. Either way, when it comes to the price trends of the market, the degree of uncertainty is a key drive behind the price fluctuations, and that is likely going to increase as we go on from there. When companies announce that they are going to enter or exit different markets, or that they will be trading on different platforms and exchanges, this can all have significant ramifications on the price of this asset. Some of the considerations to have when operating in this context include having a clear view of what is going on, especially regarding the cash flow and the capital flow, and avoid certain potential pitfalls. One of these is to be careful with short positions. Inherently, short positions are riskier than long positions as the downside of long positions is limited, whereas the short positions can lose you as much money as the stock price may reach, which is infinite. On top of that, we're now seeing a new phenomenon with short squeezes, involving a group of retail traders propping the stock price up, forcing short sellers to recover their positions. Sometimes the attempt will not succeed, but sometimes they end up in very spectacular success. Something else to consider is to treat tech stocks with care. To start, ask questions when the price of a security skyrockets without real fundamentals. It doesn't mean that you shouldn't be touching it with a 10-foot pole, but it does mean that there should be a difference between the decision of long-term holding and short-term trading. Either way, a rule of thumb is that each position should be structured in a way so that their individual performances will never affect the portfolio's stability. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.